Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. I'm Samay Zaka, standing in for Julita Telebi. With me in studio, of course, as always, is Garth McKenzie. He's the founder of the online site Traders Corner. Garth, welcome to you.
Hi.
So we've been having a bit of weakness in the market of late. I mean, what's your sense of that, and do you think it's going to lead to more medium-term weakness?
Yeah, well, certainly we have had quite a sharp sell-off in the last week. I think we've had 8 down days in a row on our market now. So we're getting into fairly oversold territory in the short term. We probably are a little bit exhausted on the downside for now, and maybe we can stage a little bit of an oversold bounce here. But I think from a bigger picture perspective, I do still think there's a fair likelihood that we're going to go lower on our market over the coming months. And that's pretty much the way we've positioned ourselves on this portfolio, looking out certainly for the first half of this year anyway. So yeah, tricky times at the moment, and we've needed to be positioned on the short side, which fortunately we have been on this show.
All right, we'll get further into the portfolio just now, but were you as surprised about the interest rate hike last week as most seem to have been?
Well, look, yes and no. We had seen a number of the other emerging markets hiking interest rates, some very aggressively, like in Turkey, where they raised the benchmark. They raised the borrowing cost of money by 50% in Turkey. So we sort of were next in line, as it were. But having said that, 25 out of 25 economists said that there would be no rate hike last week, and then we got a rate hike. And the market reacted very, very negatively to that, particularly in the interest rate sensitive stocks, your retailers, your banks. And I think those stocks really are taking the view now that interest rate hikes never come on their own. They always come in a cycle. And this probably now starts the next tightening cycle in terms of interest rates, and that probably is going to tighten profit margins and tighten the consumer's belt even further. So it's understandable why you saw the negative reaction in the domestic shares and the interest rate sensitive specifically.
All right, let's get into your trade for last week. I believe it has worked rather well.
It has worked rather well. We did a short on the top 40 future last week, and the chart that's up on the screen at the moment is a fairly zoomed in daily chart of the top 40 spot index. And what really caught my eye at the time when I did this trade was the fact that we had this shooting star candle which was basically Thursday 2 weeks ago. And those candlestick patterns typically do mark a top. And what it represents is you've got a long tail to the upside, making it look like a shooting star. And the thinking behind that is that it implies that at some point during that day of trade, the market was fairly high, but by the end of the day, the sellers came in and aggressively pushed the market lower and ended it, in the lower half of the day's trading range. And that's what we refer to as a reversal. And it gives an indication that the sellers have now taken the upper hand in this battle, and the buyers have now sort of started to roll over, as it were. What also happened thereafter was we saw a breaking of this uptrend that had started in mid-December. And that then gave the signal to go short. So what I did for the TV show's portfolio last week was I went short on one contract of the March top 40 futures contract at a level of 42,270, and I put my stop loss at 42,800. That was 530 points above my entry point, which implied that I was risking 5.3% of our trading capital on this trade. Now, as you can see, it's worked very, very nicely. We've had a number of negative days in a row. We've now got to the point where we're testing the round figure at 40,000 today. In fact, we've been lower than that. We've been down to about 39,600 odd. And that marks a flush through the bottom of the 50-day moving average, which is that red line that's on the chart over there. Given this, and given the fact that we're also pretty oversold now, I felt it was necessary to bank a profit, a short-term profit on this trade now. I'll show you on the next chart why as well. But I basically managed to buy that trade, buy that short back at 40,000, and that allowed us to bank a profit of 22,665 Rand. So a very, very nice, tidy profit for just over a week worth of work, as it were. If we have a look on the bigger picture chart here of the top 40 index, now this goes back over the last 9 months or so. What you can see here is we've got an uptrend that goes back to the June lows of last year, and it joins the December low that we saw late last year. And where the market is trading today, basically this 39,650 area. We've been down to that level on our spot market today. And I felt that there's a likelihood that at this point we maybe see the selling pressure abate for the short term anyway. We are very oversold, as you can see on the stochastic at the top of that chart there. And what I would expect is likely from here is that we might stage a little bit of an oversold bounce. Maybe we make some sort of a consolidation pattern within this new downtrend. But I do expect that over the medium term we still are going to go lower. I still think we'll probably go and visit our 200-day moving average on the market at some point, which is this green line at the bottom here. Comes in at around about 38,500. I think there's a fair chance that we'll go there at some stage in the first quarter or the second quarter of this year. So although I've banked a profit on this short, I will probably be looking to re-enter that short again if we see a little bit of a bounce in the market from here.
Okay, so that's working out nicely. Looking forward to getting an update on that a little later on. This week you're looking at Firstrand as a new trade. Yes,
I am looking at Firstrand. Now this is interesting, and a number of regular viewers might say, well, I'm breaking some of my rules here because this is a stock that's in a downtrend now, and it's the 50-day moving average on this stock is actually starting to point downwards. But I think you also need to take into cognizance the fact that this year is likely to be different in terms of how we trade this market. And I spoke about this extensively at our face-to-face session in Johannesburg last week and said that there's certain things we're going to need to look for to try and trade a choppy market and to try and capture the additional volatility that is likely to be witnessed in 2014. So with that in mind, there are a number of talking points around why I'm buying Firstrand this week. The chart of it is up on the screen at the moment. The first thing that really caught my eye last week was this massive volume spike that we saw on the day of the interest rate hike and then the following day thereafter. On that major spike that you can see there, the share traded 65 million shares in a day. It's more than 6 times the average daily volume traded for Firstrand. That for me was a very big eye-opener. And I like looking for these volume spikes as possible capitulation points. If you think about it, what makes that volume is a mass of buyers and sellers. But you've got to think about it from the psychological point of view. What are the sellers most likely thinking? Well, they're most likely panicking. What are the buyers thinking on the other hand? Well, the buyers are looking at a bargain on their hands. And you have this massive change of ownership in the shareholding, where you've got the weak-minded sellers, if you like, being exhausted, and then you've got these new buyers that come into the market and they've picked up the stock at a good price, at a bargain, if you like. Those new buyers, those new shareholders are unlikely to be forced sellers anytime soon. So what typically happens is when the sellers have exhausted themselves, very often the price actually bounces quite quickly. And you can see this on this chart in other instances. We saw it back in June last year where there was a big volume spike and it marked a low in the share price at that point in time. And you pick this up on different share price charts all the time. But that was the first thing that really got me interested. The second thing was that we've got this positive divergence evident on the stochastic oscillator here. And that positive divergence basically indicates to me that the selling momentum is starting to wane. All right, and that often it preempts a short-term change in trend. The other thing is that we've got this Fibonacci retracement. Now, I don't talk about this very much on the TV show, but I felt it was really interesting at this point in time. Because if we take this whole move from the lows in June up to the highs that we saw in October of last year, this retracement that we've seen in the share price now is a perfect 61.8% retracement of that entire rally. It's been down just below the 30 Rand level today. The 61.8% retracement comes in at around about 30 Rand. We saw Firstrand trading just underneath 30 Rand today, probably flushing out a whole bunch of stop losses. And now it looks as if the buyers have come in and we're seeing a bit of a reversal happen there today. So all in all, that to me gave me a number of reasons why I think we can see a short-term bounce in this share price here. And that's all I'm looking for. I'm not looking to buy it expecting it to go back to its all-time highs. Definitely not. I'm just looking for a short-term bounce of maybe 5 or 6% in this share price, and then I'll probably take my profits. So I've gone in today. I've bought at 30 Rand and 50 cents. My stop loss that I'm using is 29 Rand 50, which is out of the way of today's low point of our reversal. And the target that I'm really looking for here is 32 Rand, maybe 32 Rand 50 at a push. And that's it. And I would look to bank a profit on that once we get there.
I noticed that the risk that you've assumed of this trade is half the 2% that you normally do take?
Yeah, well, let's just quickly have a look at that first, and then I'll talk to that point now. I'm buying, these are the mechanics of the trade. I'm buying it at 30 Rand 50 cents, as I mentioned. My stop loss is at 29 Rand 50. The risk per share in this case is therefore 1 Rand per share. I'm going to risk only 1% of my capital on this trade, which is 2,850 Rand. And now, to answer your question, yes, I'm only risking 1% of my capital. Usually, we will take up to 2% risk of our capital on this portfolio. And this is half the normal size. And this is sort of a rule that I've implemented for myself this year on a number of trades. Because I feel that the market is going to be very volatile and choppy, I'm actually looking to scale back the size of the trades that I take to some extent. And that's what I'm reflecting here, particularly given that this is a stock that has been weak of late, and I'm really just looking for an oversold bounce. You could argue I'm sort of almost fighting the short-term momentum here, but I think that the likelihood of a short-term oversold bounce is fairly good here. But nonetheless, I don't feel convinced enough of the trade to warrant taking a full 2% risk in this case. I take our portfolio risk of 2,850 Rand and I divide it by the risk per share, and that allows me to trade 2,850 CFDs. So that's what I've bought for our portfolio this week. My target, as I said, is 32 Rand, and that means that my risk to reward ratio in this case is 1 to 1.5. So not a very exciting risk reward ratio either. So you can see, on the whole, why I'm erring on the side of caution here with this trade.
All right. Okay. Let's take a look at the portfolio as it stands now.
All right, it's looking good. I must say, I'm very pleased with this performance. We're up 14% for the year to date, and given that the market is firmly in negative territory for the year to date, I think this is a good performance. You can see all of the trades that we've done for the year so far. Our Rand dollar trade, where we shorted the Rand, that worked out well. We've got a put option structure running all the way out to June, and that I'm going to leave working in the background for us. This top 40 future that we discussed this week, we banked a profit of 22,655 Rand there. And then we long of some Firstrand for this week. So as you can see, the portfolio is standing at just over 285,000 Rand at the moment.
Okay. All right, Garth, I believe then you got some courses to update us on.
Yes, I do. This Thursday evening, I've got an Understanding CFDs course. That's on the 6th of February. It's a 2-hour evening course starting at 6 o'clock in the evening. There's still space available. Anybody that wants to learn about CFDs is welcome to come and attend that course. And then I've got high probability trading courses coming up in Johannesburg on the 8th of February, which is this week, Saturday. There's still space there, and then in Cape Town and Durban thereafter. And then finally, we've got a face-to-face session at the end of this month on the 27th of February. If anybody would like to attend any of these, you're welcome to email me, garth@traderscorner.co.za, and I will send you the details.
All right, good place to leave. Thank you very much.
Thanks.
That is Traders Corner for this week. Till next time, goodbye.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.